The market shedding 0.25%, but trading in the red. What is going on in Kenya? I mean, last week we were quite excited by what looked like a rebound, and now we're on the way back.
Yeah, it's quite a bit striking the economy for the market right now. Lots of issues. Look at investors. We have a real interest rate in the negative positions, and investors asking for inflation adjusted returns. And so it's a question of a hold position for local investors, and they don't want to overstretch their position in the market. Still weighing their options and sitting on the spectator benches, you know. So the market basically, for the last weeks, we've seen it's been left to the foreign investors trying to overstretch the positions on notable counters as Safaricom, KCB, EABL, and the likes of Barclays, you know. Seen a bit of selling pressure on equity for the last 2 weeks from foreign investors. So basically, if you look at, in fact, if you look at last week's data, everybody is cutting their position in the market.
All right, let's talk about how that's having an impact on the shilling, or rather how the shilling is having an impact on the market, because shilling volatility has really been a damper on this market, and it doesn't seem to be abating. We've got an MPC decision to be taken tomorrow. We've had consistent measures to tighten monetary policy, and now a possible another rate hike coming to the fore. Is that going to mitigate?
Actually, a rate rise is in the offing, and this is the best. This could be one of the best possible of a respite for the shilling. You know, as I mentioned, a real interest rate is at negative positions. I mean, inflation is literally wiping out any gains in the market. So any investor, typically, you're looking for an inflation-adjusted return. So look at the shilling. Basically, I mean, the last 2 weeks, the market has really, all risky assets have tracked the shilling, and it's been volatile. And you're having an MPC meeting tomorrow. I mean, nothing short of a 50 BPS rise will save the shilling.
Let's talk about the gainers in today's market nonetheless. Scan Group's share price up 5%, Safaricom up 1.3%, and so too improvements for BAT.
If you look at, I mean, if you look at the whole of last week, and I said to our note to clients, it's volatile, yes, but buy on dips. You know, it's the market basically offering an entry level for all investors, and if you look at Scan Group, did what, 18% downwards. I mean, that's a perfect entry point for the market, and it's basically bargain buying. If you look at the likes of Diamond Trust Bank books closures, I mean, the bank just plummeted in excess of 18%. So got investors, value investors, both speculators coming in on board on dips, and we were saying that that's the best strategy at the moment. Just keep buying on the dips. You know, it's a jigsaw, yes, but most of those counters, they tend to thrive a lot on short-term sentiment, and in fact, we've seen most local investors, they've converted to short-term positions. And you're saying that long positions will not benefit investors at the moment. It's a short thing. You know?
All right, George. So the market's a bit cheap at the moment, buy on a dip. But which sectors are going to offer you value? I mean, Scan Group has consistently done well, despite how the market has performed. Seems to be service stocks offer some sort of value for the investor. The banks have done particularly well with regards to their profits. But now that we're seeing interest rate cycle changing, they might be impacted going forward.
Yes, that's true. Basically, looking at financials and the advertising fraternity, these are good. They have good values for the investors, both short-term and long-term. And at the moment, look at global crude prices. They're very high. Who are going to be affected? The industrials. Look at the exchange rate. The shilling has been, set a record high. It's not good for the exchange. I mean, for companies importing raw materials. And that's why you see there's not been a lot of activities on the industrials, because the fundamentals of the business going forward is so weak. So there's a bit of respite in the advertising, the commercials, and then the financial sector. I'm quite still overweight on the financials despite the current high interest rate environment. You know, you're seeing in fact, looking at Q1, you can see that the bond income plummeted a bit for some banks, and that resulted in some negative returns.
All right.
But still, generally, we still overweight on banks, and we're asking, hey, go short on banks, you know.
Let's talk about other market-moving news. Barclays Bank of Kenya, they were meant to have an AGM on Friday to discuss whether or not to go ahead with a share split. I mean, some investors were really concerned to the extent it would dilute their shares, but it's part of a much bigger plan to really tap into a much wider audience with retail investors as well.
It's a good thing for Barclays to split, and we just wish that other big banks like Standard could split. Yes, and I'm saying that it's a good buy after the split. It's affordable, but Barclays should be what I would call a safe haven. Look at the banks, look at banks, especially Barclays and Standard. I would say it's a deliberate effort not to grow. And yes, it's always been a safe haven. So in a volatile environment like we are in right now, Barclays will do you a great deal because it's not subject to out of volatility like we are seeing right now.
All right.
And looking at this week, I think investors should, it's going to be an active market. Lots of news to look forward to. Barclays splitting their books tomorrow. We have KQ releasing their results on Thursday. We have Uchumi releasing tomorrow. A lot of expectation in the market this week, so should expect a good week.
Okay, and very briefly, in 30 seconds, we've already speculated that the CBK could be raising rates. What do you think, by what percentage?
As I mentioned, nothing short of 50 BPS. My expectation is I expect 50 BPS to, I mean, a 50 BPS rate rise. Should be good for the shilling. This actually, you realize that we are in a very nasty high inflationary pressure at the moment. And, you know, you have to act. It's a striking dichotomy for the bank. It's high inflation, you have to spur growth. So it's a knife edge, you know, I will call it like that. It's a knife edge for the bank.
Okay.
They have to balance growth and inflation. So I think the first priority of the bank should be to cool off the price surges, you know. It's really getting nasty for the
All right, George, thanks. We have to leave it there. So we'll see what the Kenyan Central Bank decides tomorrow. And the consensus view is that they'll hike interest rates by 50 basis points.